What if I told you there's a completely legal account, backed by the UK government, that lets you invest your money and never pay a single penny of tax on the profits? No income tax. No capital gains tax. Not now, not in 10 years, not ever, as long as the money stays inside this account. It's called the Stocks and Shares ISA. And the fact that millions of people in the UK either don't have one or don't understand how it works is, frankly, leaving thousands of pounds on the table every year. By the end of this video, you're going to understand exactly how it works, how much you can put in, where to open one, and, crucially, what to actually invest in once you're up and running. Let's break it down. Let's start with the basics. ISA stands for Individual Savings Account. It's essentially a wrapper, think of it like a protective shell, that sits around your investments and shields them from tax. There are several types of ISA in the UK. There's the Cash ISA, which is basically a tax-free savings account. There's the Lifetime ISA for first-time buyers and retirement savers. And then there's the Stocks and Shares ISA, which is what we're focused on today. The Stocks and Shares ISA lets you invest in things like company shares, funds, bonds, and ETFs. We'll explain all of those in a moment, and you don't pay any tax on the gains you make or the dividends you receive. Outside of an ISA, if your investments grew and you sold them for a profit, you'd potentially owe capital gains tax. If your dividends exceeded the annual allowance, you'd pay tax on those too. Inside the ISA? None of that applies. It is, without question, one of the best tools available to everyday UK investors. Let me give you a real example so this clicks. Say you invest £500 a month into a Stocks and Shares ISA over 20 years. At an average annual return of 7%, which is roughly the long-run historical average for a globally diversified index fund, you'd end up with approximately £260,000. Your total contributions? £120,000. Your profit? Around £140,000. Outside an ISA, a chunk of that profit would be eaten by capital gains tax, potentially thousands of pounds depending on your situation. Inside the ISA? You keep all of it. Every single penny. You can withdraw it, spend it, reinvest it, completely tax-free. And this compounds over time. The longer your money is in the ISA, the more the tax protection is worth. Starting earlier matters enormously, even starting with small amounts. Someone who starts investing £100 a month at 25 will almost certainly end up with more money than someone who starts putting in £300 a month at 40. That's the power of time in the market. Right, let's talk rules. Because there are a few important ones to understand. Every UK tax year, which runs from the 6th of April to the 5th of April the following year, you have an ISA allowance of £20,000. That's the total amount you can deposit across all your ISAs combined in that tax year. So if you put £10,000 into a cash ISA and £10,000 into a Stocks and Shares ISA, you've used your full £20,000 allowance. You can't add any more until the new tax year begins. Crucially, you can't carry your allowance forward. Use it or lose it. If the tax year ends and you've only used £5,000 of your allowance, that unused £15,000 doesn't roll over to next year. It's gone. You can have a Stocks and Shares ISA alongside a cash ISA and a lifetime ISA, you just can't exceed that £20,000 total across all of them in the same tax year. One more important rule, your ISA is individual. You cannot share it with a partner or family member. But as a couple, you'd each have a £20,000 allowance, so together, you could shelter up to £40,000 per year from tax. Powerful stuff. Inside a Stocks and Shares ISA, you can invest in a wide range of things. Let's quickly run through the main ones. Individual shares. This means buying a piece of a specific company, like Tesco, Barclays, or Apple. You become a part owner of that company, and if it does well, your investment grows. Funds. A fund pools money from lots of investors and invests it across many companies at once. This gives you instant diversification, you're not betting everything on one company. ETFs, exchange-traded funds. Similar to funds but traded on the stock exchange like individual shares. They tend to have very low fees and are often used to track an index like the FTSE 100 or the S&P 500. For absolute beginners, a simple global index fund or ETF is often the best starting point. Something like a fund that tracks the FTSE All-World Index gives you exposure to thousands of companies across dozens of countries, all in one investment. Low fees. Simple. Proven. Bonds. These are essentially loans to governments or companies. Generally lower risk than shares, but also lower returns. Most beginners don't need to worry about bonds to start with. The key takeaway here is this: you don't need to pick individual stocks. You don't need to be a financial genius. A simple, low-cost index fund inside a stocks and shares ISA is one of the most powerful long-term wealth-building tools available to ordinary people. So where do you actually open one? There are quite a few platforms out there, and the right one depends on your situation. Here are some of the most popular for UK beginners. Vanguard Investor. Vanguard is one of the world's most respected investment companies. Their platform is simple, their fees are among the lowest around, and they offer excellent index funds. If you want uncomplicated and low cost, Vanguard is hard to beat. They charge 0.15% per year on your portfolio, capped at £375. Hargreaves Lansdown. The UK's largest investment platform. More features, more investment options, and a very user-friendly app. Their fees are slightly higher, 0.45% on the first £250,000, but for a beginner with a smaller portfolio, the difference in actual pounds is minimal. Great for those who want lots of choice. Free Trade. A newer, app-based platform popular with younger investors. Commission-free trading on thousands of UK and US stocks and ETFs. Their ISA costs £4.99 a month. Very simple interface, good for those who want to keep things straightforward. Invest Engine. Relatively new but excellent for ETF investing specifically. Very low fees. Good choice if you want to build a portfolio of ETFs. My suggestion? For pure beginners who want to keep it simple, Vanguard or Invest Engine. For those who want more control and flexibility, Hargreaves Lansdown or Free Trade. Getting started is genuinely straightforward. Here's the process. Step 1. Choose your platform from the options we just discussed. Go to their website or download their app. Step 2. Open a stocks and shares ISA. You'll need to provide some basic personal details: name, address, national insurance number, proof of identity. This usually takes about 15 minutes. Step 3. Fund your account. You can start with as little as £1 on some platforms. Vanguard's minimum is £500 for a lump sum, or £100 per month for regular investing. Step 4. Choose your investment. For most beginners, I'd strongly recommend starting with a single global index fund or ETF. Something like the Vanguard FTSE Global All-Cap Index Fund, or a HSBC All-World Index Fund. Check the fund's charges. You want something with an ongoing charge figure, or OCF, below 0.25%. Step 5. Set up a monthly direct debit if you can. Investing regularly, even small amounts, is far more effective than trying to time the market with big lump sums. And then? Leave it alone. Check in once or twice a year. Don't panic when markets dip, they always have and they always recover. This is a long-term game. Before we wrap up, let me quickly flag the most common mistakes beginners make with their stocks and shares ISA. Mistake 1. Leaving it in cash inside the ISA. Some platforms let you open an ISA and then leave the money sitting in cash, not invested. Your money won't grow if it's not actually invested. Make sure you complete the investment. Step after depositing. Mistake 2. Checking your portfolio every day. Markets go up and down constantly. If you check daily, you will panic at some point and make a bad decision. Check monthly at most. Mistake 3. Trying to time the market. I'll invest when the market dips. Sounds sensible. In practice? Almost nobody gets this right, not even professional fund managers. The best time to invest is consistently, regardless of what markets are doing. Mistake 4. Not using your ISA allowance before April 5th. Every year, thousands of people miss the deadline and lose their allowance forever. Don't be one of them. The Stocks and Shares ISA is one of the most powerful tools any UK investor has access to, and the best part is, it's available to absolutely everyone. You don't need to be rich. You don't need to be a financial expert. You just need to start. If this video helped you understand it better, give it a like. It takes 2 seconds and it means the world. Subscribe if you want more straightforward finance content like this. And drop a comment below. Have you got a Stocks and Shares ISA? Are you thinking about opening one? Let me know. See you in the next one.